So the final exam review sheet is just as it sounds. It's simply a summary of all of the information that we've covered in this class. Okay. So that's the purpose of it, is to sort of show you so we did 11 chapters, as you see, and we looked at several formulas that I've given you as sort of make sure you understand and have these handy. Now, remember, this is online, so you will have access to your book, your notes, anything that you need. Okay. I would not Google any of this stuff because it's based on this specific book. It's not based on anything on Google. It's based on this specific book that we use. And what you should be doing to review for the exam is look at some of those homework reviews that I've given you. All of the assignments are open on Wiley for review, including the answers are there. That's a really good thing to review. Go back over your homework, particularly those chapter reviews, or if you want to look at the old module exams. Those are good things to review because they're open and available to you. Much better than using anything crazy like Google, which gives you a million answers for the same question. But this is specific to this book. So let's do a quick review. Let me tell you a little bit about some of the things that are basic stuff that you would need to know. Now, although the exam is 66 questions, the half of the exam basically reflects half of the course. It took us about half the course to get through 4 chapters, the first 4 chapters. So the final exam is structured that way. The first 33 questions or so are based on these first 4 chapters. So what was the most important parts of these first 4 chapters? That's important to know. The financial statements, critically important, right? This should not be a surprise to you now that we are done with this course. You are expected to know what's on an income statement, right? You should know revenues minus expenses gives you net income by now, right? I mean, it's been a long time. You should know that by now. You should also know the balance sheet is the assets equals the liabilities and stockholders' equity. You should know that by now. So there's a few things that you will be tested on that have that basis. You also know how to identify various accounts. You know, when you look at sales revenue, that's a revenue account, and that belongs on the income statement. You also know when you see unearned sales revenue, that's a liability account, and it belongs on the balance sheet. So these are things that are expected that you know by now, and thus are good to review. Okay. So not only do you need to know the main statements, you also need to know how to classify the accounts on those statements. So when someone says supplies, you know that's a current asset and it belongs on the balance sheet. Right? Remember, in chapter 2, we did the classified balance sheet, so that's really important to understand. When you see an asset account or a liability account mentioned, how would you classify it? Remember, there are 4 classifications of assets: current assets, long-term investments, property, plant, and equipment, and intangible assets. They're classified for specific purposes, and you need to understand how to identify those. You also know liabilities are classified as either current or long-term. That year mark is the important marker between current and long-term. Anything prior to a year is current. Anything over 1 year is long-term. And so whether you're looking at assets or liabilities, that 1 year mark is still the important part to understand the difference between current and long-term. Right? So all those are very, very important to understand. Of course, chapter 3 and 4, now that you understood the financial statements and understand all the accounts and where they belong, you learned how to analyze transactions and to see what accounts were affected. Right? So you know if you sold goods to a customer for $100, you had more cash, and you had more sales revenue. So again, you learned how to evaluate various issues, right, and transactions. And then you learned about how to read an account. All accounts have two sides, just like all coins have two sides, as the heads and the tail. All accounts have two sides, a left side and a right side. Just we have names for those sides. The left side is the debit side. The right side is the credit side. We do not look at things in terms of, pluses and minuses per se in accounting. We look at things from the lens of a debit side or a credit side transaction in an account. We know by what side of the account it hits, we know what happened to that account. You know that assets increase on the debit side, on the left side. So every time you see a number being put into the left side of an asset account, you know that there's more of that asset that was acquired by the company. You also know that if the debit side of an asset account is how we show we have more of the asset, the other side is how we show we have less, because only two things can happen in an account. You can either have more of something or less of something. That's the only two things that can happen in your account. Think about your bank account. For your savings account, there's only two things that can happen in your savings account. You either put more money in or you have less money in there, right? So it's either in or out, basically, more or less. All accounts work that way. Doesn't matter what they are. All accounts are looked at. We've had more of it or less of it. So the credit side of an asset account is showing how we have less. But the credit side of a liability account and the left side of a stockholders' equity account is how we show we have more on those, right? So that side of the account shows more liabilities or more stockholders' equity, which means for stockholders' equity and liability accounts, their opposite side, which is the debit side, is how we say we have less of it. So when we have less accounts payable, less bills to pay, we'll debit the accounts payable. That shows we have less bills to pay, right? So you have to understand the accounts, very, very important, right? So not only do you learn the statements and you learn how to classify different accounts, you need to know how the account works. And we learned that in chapter 3. Then another thing we learned is the actual accounting cycle, right? Accounting starts in the journal. Transactions are first recorded in the journal. But remember, we had to learn all that stuff first because look how much analysis happened before we can actually write it down in the journal, right? But the journal is the very first place accounting occurs. It's where we write down all those transactions. And it's one of the more important things you need to know about accounting is everything starts in the journal. From the journal, everything posts to the ledger. Each account is listed separately, has its own little section in the ledger. And if you open up the ledger to a specific account, like cash, you will see a history of everything that happened in cash. Where does that history come from? It comes from the journal. So whatever we put into the journal gets transferred into the ledger, and the ledger shows us basically the history of what happened in that account, whether that history is just for the past week, the past month, the past year, or whatnot. It'll show us what happened in that account, okay? And that history comes from the journal. And so it starts in the journal, goes to the ledger. How do we know the ledger, which basically lists all the accounts with their balances? How do you know the ledger is okay? Well, that's what a trial balance is for. A trial balance helps us make sure that all of the ledger accounts with a debit balance equal all the ledger accounts with a credit balance. So that's basically all a trial balance does, is to help us understand that the ledger itself is in balance. Then we looked at chapter 4, which basically closes the books on the company's records can only be kept for no more than 1 year, after which they need to be closed, right? That accounting year, that accounting record needs to end, and a new accounting period or a new accounting year needs to begin. When you begin a new accounting period, your revenue, expenses, and dividends have to start at zero balance because you're keeping track of those records separate year to year. So the closing process explained exactly how we close those accounts to zero and put our final statements together. So you learned about adjusting entries to make sure that all of the revenue and expenses are recorded for the particular year before they're closed. You've also learned about that process. Also starts with journal entries. It then gets transferred to the ledger. So some accounts in the ledger have changed. So that's why we have to do an adjusted trial balance to make sure now that we've adjusted some accounts, are they still in balance? That's what the adjusted trial balance tells us. Once the adjusted trial balance is done, we now have all the final numbers to do our financial statements. And as you know, the income statement's always done first, retained earnings statement second, balance sheet third. Right? All of those numbers, when we do our final statements, will come from that adjusted trial balance. Once our financial statements are done, now we need to close the books, which is basically closing the revenue, expense, and dividends accounts for that period, for that year. Why? Because we have to start the very next day as a new accounting year and keep those records separate. So that closing process allows us to keep separate records from one year to another. Okay. So that's the cycle that we learned. And as you see, there was a lot to it. We did a lot of work in the first half of the course, and there was a lot of tedious work. You had to sit down and create income statements, create balance sheets. You had to do a lot of journaling and so forth and so on. It was very time consuming in that regard. So half of the final exam is on all of that process that we just did. And again, if you think about it, it's 4 chapters with about 30 questions to it or so. So about 8 questions per chapter, roughly. That's not terrible. And again, I have to pick the most important parts of each chapter to test you on. I need to make sure you understand the financial statements, the accounts, the process of the journal to the ledger, et cetera, to those financial statements. So I have to select questions that are very meaningful. You should know how to identify journal entries. You should know how to identify like what the total property, plant, and equipment is versus the total liabilities. You should be able to identify various things by now based on that. So I think when you're looking at all of those chapters, it may not necessarily be all that important to look at every single part, but what were the most important things? That's what I'm going to be testing you on. Then we started a whole new journey with chapter 5 all the way to chapter 11. And that journey, again, took us about half the semester to get through. And again, it was a little different. There was a little less emphasis on the bookkeeping and a lot more emphasis on the concepts and analysis. Financial analysis was part of this as well. So we started with grouping accounts. Chapter 5 and chapter 6 talked about inventory. And so you learned a lot about inventory. Inventory is a business-to-business transaction. One business buys inventory from another business that sells it. We looked at how each of those businesses look at that process. So making sure you review how the buyer sees things and how the seller sees things. It's the same transaction, it's the same invoice, but they look at it and do their accounting differently based on that. We also learned a very important part of chapter 5 is that multi-step income statement. Remember, merchandising operations do their accounting slightly different than what we learned in the first 4 chapters. They have something called cost of goods sold. There's something called gross profit. You should know how to reach that. But even prior to reaching gross profit, you need to know that sales has a lot going on, right? You need to know that there was sales revenue, then we have to subtract out sales returns and allowances, then we have to subtract out sales discounts, to get something called net sales. So the calculation of net sales is important. The calculation of gross profit is important. Those are things that are very important parts of that multi-step income statement. We also learned how to calculate the cost of goods sold and inventory. It was expanded upon in chapter 6, so I will talk about it when we get there. Another thing we learned too is some financial analysis, and the first pieces of financial analysis actually started way back in chapter 2 when we got introduced to it, but now we got more detail. For chapter 5, we looked at gross profit rate, which is the gross profit compared to the net sales, and we looked at profit margin, right, the net income compared with the net sales, because as you see, companies have lots of expenses to pay before they can keep anything in their pockets. So those were important, and you should know them. Of course, you will have access to all the formulas, so make sure you keep those handy anyway. Chapter 6 continued our voyage in inventory with understanding how to calculate cost of goods sold through one of the cost flow methods. So yes, there will be a question on FIFO, LIFO, and average cost, one question each. It's somewhat basic, so review that homework. We also looked at how inventory is presented on the balance sheet. Remember, since balance sheets show us our assets, we cannot overvalue the assets anytime. So we have to go through a process. We called it lower of cost or market, in order to make sure we're valuing the inventory properly. And then we did an analysis, some financial analysis of inventory. Those are important. How quickly does the company sell out its inventory, right? That's the inventory turnover rate. And then once we know the inventory turnover rate, we can throw that under 365 to actually calculate the number of days that the company is holding onto its inventory before it's completely sold out. So those were important aspects. As you notice, concepts are important here. Analysis is important here. The calculations are different than what you learned in the first 4 chapters, but they matter a lot. So this is really the important parts going forward. So chapter 5 and chapter 6 were on inventory. That was module 4. Module 5 grouped up chapter 7, 8, and 9 as one. Chapter 7 is literally mostly dedicated to cash, but the most important part of chapter 7 really is understanding internal control and this concept of fraud that does happen. And it's a narrow definition of fraud between an employee, when the employee basically takes from the employer. That's how narrow that definition is here. And that we had Sarbanes-Oxley. Congress required companies to put into place internal controls to stop fraud, right, on many different levels. So we learned about all of those types of principles. And yes, there's going to be several questions on that on the exam. So remember that the segregation of duties, the documentation, human resource controls, those types of things are really, really important from chapter 7. And of course, what fraud is and the purpose of internal control. Those are very important concepts from chapter 7. Chapter 8 was really about receivables. It mostly focused on accounts receivable. And here we had to do some analysis of accounts receivable, because just because someone owes you money doesn't mean they're always going to pay, right? Accounts receivable is an asset. It has to go on the balance sheet. And just because we're owed $1 million doesn't mean we should value our receivables at $1 million, because we know, as you learned in chapter 8, not everyone's going to pay us, right? So we have to go through a process of valuing accounts receivable. GAAP requires us to use the allowance method. And so we learned about the allowance method, creating an allowance for doubtful accounts, and showing that we are putting money aside in that allowance account to identify bad debt. And once we identify bad debt, we use that allowance account to pay down and clean our accounts receivable, in essence. So that was important. We also looked at notes receivable. How to calculate interest is important. Um, and again, when a note is received, it's everything is received at once. Both the principal amount and the interest amount is all received at one time. And so the principal itself is the note being returned. Any interest you earn needs to be recognized as revenue. And so we learned about that as well. We looked at receivables on the balance sheet. That presentation included the allowance account that was noted back in Objective 2. And we also did some analysis of receivables, how quickly we are collecting receivables. Our accounts receivable turnover ratio was very important because we should be collecting our receivables based on the terms we provide. If we say to customers, pay in 30 days, we should be collecting every 30 days, which means we should be collecting about 12 times a year. So the analysis of that allows us to see whether we're actually on target or not. Chapter 9 was all about property, plant, and equipment and intangible assets, two very, very important things to know. The first thing we learned is how to actually calculate the cost of an asset, a fixed asset. So when we buy land or when we buy a building, what does the company have to look at to determine the cost of that asset? So that was the first thing we learned, and there certainly will be some questions, at least one or two questions on that, because that is a very important aspect. Remember, everything the company had to spend to get that asset ready for use is the method we use. That's the standard we use to find out what the real cost of the asset was. We also would then know that a lot of assets, with the exception of land, will need to be replaced over time. So whether that's the building itself, whether it's the parking lot on the land, whether it's refrigeration or cooking equipment or whatnot for a restaurant, eventually those property, plant, and equipment assets will need to be replaced. And so because we know that, we can start this process called depreciation, and which is a way of allocating the cost of that asset over a very long period of time. Remember, all of these plant assets have useful lives in the years. Okay, some we might only use for 3 or 4 years. Some we might be using for 10, 20, 30 years. Either way, they have a long useful life. Depreciation allows us to slowly allocate or expense part of the cost of that asset over its useful life. You have to know about straight line depreciation. That was the method that is clearly the most used. Over 80% of companies use that. And so you need to understand and be able to apply a straight line depreciation method. We learned a little bit too about this idea of when we sell or dispose or retire a plant asset, we have to recognize we might have a gain or a loss when we dispose that asset. And the way we recognize a gain or a loss is to compare the proceeds, the amount of money we received when we sold it or retired it, versus the book value. That's where the book value really comes in to play here. If our proceeds are more than the book value, we have to recognize a gain on the disposal of the plant asset. That gain is recognized on the income statement. However, if the proceeds are below the book value, we recognize a loss. That loss is also recognized on the income statement, but you have to know how that works for Objective 3. But in Objective 4 was a review of intangible assets, incredibly important part of today's world. You have to know how to identify those. It's mostly definition type of thing. What's a patent? What's a copyright? What's a trade name or a trademark? What's a franchise? Things like that, what goodwill is. So you should be able to identify and know what those are. That's really the part there. And then we did a little bit of analysis on that, return on assets, asset turnover. Are we using our assets to generate sales? Are we using our assets to generate profits? That's basically what we looked at there. And then chapter 10 and 11, we just completed it. So I don't know how much of a review we need here, but again, just to know what you just known for your test is important. Right? How to account for current assets. There are lots, sorry, current liabilities. There are a lot of current liabilities. Some of the ones that you learned about here that were new revolved around things like sales tax payable, FICA tax payable. You also learned about payroll taxes, that the company itself has payroll taxes that are separate from what you see coming out of your check. Right? All of that money is liability because that has to be forwarded to either the state government or the federal government, depending on what the program is. Right. So very important to understand all of that. We also learned about bonds and some of the characteristics of bonds. Just know that bonds are long-term loans from investors, so they'll be a long-term liability. There are some features to bonds, but in general, just some basics there. And again, we did some analysis, right? That debt to equity ratio, times interest earned. We did a few pieces of analysis that were very important as well. And chapter 11, the last chapter we just looked at was, some major characteristics, advantages and disadvantages of the corporate form. But mostly what's really important is the differences in, common stock, preferred stock, treasury stock, understanding the difference between authorized, issued, outstanding, and treasury stock. All those are really critically important. We also learned about cash dividends and how that works. That's important. And a little bit of analysis on stockholders' equity that we've also just finished up last class. I did list certain calculations which are normally included on the final exam. It's not an extensive list, but most of it is here. So again, you should need to have all of these handy for you so you can have a reference sheet in time for the exam. But that's basically the only thing that's on the exam. Okay, just a review, general review, 66 questions in the general review, the major points of the course.